Hi, everybody. Scott Riley, the Market Update Desk at MLS 157524. It is April 9th, also the start of the 2026 Masters Tournament in Augusta, Georgia. It's one of the events that is on my major bucket list. I've been to some pretty cool stuff, have not been to a Masters yet. Got to see the ceremonial tee off this morning, which was really cool with Tom Watson and the Bear, legendary Jack Nicklaus. Let's go over what's happening today. Yesterday, we saw what looks like potentially a pause in the conflict in the Middle East. Now, that's getting challenges on both sides. There's a lot of talk going on with from Iraq and from the United States. See how this goes forward. The main part of this ceasefire is safe, navigable transition for ships through the Strait of Hormuz. That's the biggest part of this from an economic standpoint that people are watching. How it affects oil prices, how it affects inflation, how it affects all the other prices as those flow through from oil and gasoline prices. To play into that, we got the March personal consumption expenditure. That is the Fed's favorite gauge of inflation. So the core personal consumption expenditure rose a seasonally adjusted 3% year over year. It was actually 1/10 better than expected. Um, the all in items headline inflation. So, what we just talked about was the core. The headline all in inflation was 2.8%. That actually year over year, that actually equals what the market was expecting. So, that's actually a nice, kind of a nice surprise. We weren't sure what to expect with the spike in oil that does start to show up in this report. Now, also in the report, it shows that consumer spending was up 0.5% on the month, but personal income fell 1/10. Economists had expected spending to rise 0.6, with income up 0.4. So, kind of a miss on the subset of numbers within the PCE. Also, got GDP, a measure of all goods and services that are sold, that rose only 0.5% on a seasonally adjusted rate. That's down from the prior reading of 0.7 and the initial estimate of 1.4%. So the full year growth held at an estimate of 2.1%. Definitely a miss on the GDP. Weighing down is, once again, the impacts of oil and how that goes through and affects consumer spending. Initial jobless claims kind of got a difference on both ends here. Initial claims rose 16,000, but continuing claims dropped 38,000 to 1.8 million. Not too long ago, we were talking about 1.6 million. So that continuing claim number has definitely been trending downward. We've talked about it on how the gig economy is affecting that and how many people are making more via gig work than what are on long-term unemployment claim payments. Now, we do get another inflation report tomorrow. That's going to be CPI, Consumer Price Index. That could be a little bit nerve rattling as some economists are forecasting a 0.9 rise in CPI. Once again, that's the first report we're seeing that is going to have impact from the increase in oil and gas prices. Now, we got a nice day yesterday in the 10-year Treasury, mostly due from the potential peace talks that are going on. They did subside a little bit in the afternoon. Doing okay today. We're down 2 basis points on yield to 4.26. Now, we're watching it real close because the top side resistance is about 4.31%. We can keep below that and trend down. It'd be really nice. Mortgage-backed securities are having another good day. We're up 13 basis points on that. The Dow is rallying for a third day at plus 270. In fact, we're up to about 48,000 in the Dow. Our low point was about 44.8, I believe. So there has definitely been a run up in the Dow. Oil, we had a significant downturn. I think the lowest in about 10 years on spike downward in oil. So yesterday we lost somewhere between $12 and $15 a barrel. Today we are up $4. sitting at $99.40 per barrel. Keeping a downward trajectory on that definitely would help a lot of different things. So we're keeping track of everything. On a sour note, the Tigers lost yesterday yet again. Their hitting is something to be desired as we're watching those games. We're on top of everything. It is getting close to the end of spring break week. If you can get out there, look at homes, make offers, get ahead of those people that are coming back from the sunny south, it will be advantageous to you. Give us a call. We'll run through programs and opportunities, options, and what the rates are doing. Give us a call, 616 293 2189, the Market Update Desk, your original singular market news source for West Michigan. Have a great day and enjoy the Masters.